Hi, I'm Pat Deeg. I'm one of the financial planners here at Marks Group. Today, I want to talk to you about the path that the average investor takes to own the raw materials in their portfolio, the stocks and the bonds. And to do so, I've enlisted the help of my kids to provide some toys that will be used as props to tell my story. All right, now let's look at an example. We've got investors, Bill and Sue. And Bill and Sue are approaching retirement. They've been diligent savers over the years, and they've entrusted their money with financial advisor Joe. Now Joe has Bill and Sue in about a dozen different mutual funds. But what Bill and Sue don't realize is Joe's not actually managing the money. Joe has outsourced the management to a third party called ABC Group. Now ABC Group is the party responsible for selecting the funds that Bill and Sue own in their portfolio. To take it one step further, ABC Group also does not manage the money. They've outsourced the management of the stocks and the bonds to mutual fund companies, which are another third party. The beads inside this cup represent the stocks that are owned in the mutual funds, and the cup represents the management team within the mutual fund. Now, while this strategy may work for some, it doesn't work for all. So let's take a look at a couple items to be aware of. First, let's look at fees. Now, because there's a lot of middlemen between the client and their end dollar, everyone's looking to get paid. And there's no such thing as a free lunch, especially in this situation. So first, financial advisor Joe is going to take a fee. Second, ABC Group, for picking mutual funds, is also taking a fee. And lastly, the mutual fund company, who manages the stocks in the portfolio, also is going to take a fee. The second thing to be aware of is mean reversion. And what I mean by that is, with the mutual funds that Bill and Sue own in their portfolio, each fund has 50 to 500 different individual stocks. When you combine 12 different mutual funds, the client literally owns thousands of securities. And in this case, there may be 3 to 5, sometimes 10,000 individual stocks. When you own that many individual stocks, the outcome that you're likely to receive is the mean return of the market. So as an example, if the market does 6, you'll likely do 6 as well. But with all these different third parties, you've got one fee here to the mutual fund company, you've got another fee to ABC Group, which is managing the mutual funds, and then you also have your financial advisor's fee. Now, the third thing to be aware of is relinquished control. In this situation, the client has delegated the investment responsibilities to the financial advisor. The financial advisor has delegated the mutual fund selection to ABC Group. And ABC Group has delegated the individual stock selection to the third-party managers. So when you have that many third parties and you've relinquished control, you lose the ability to navigate the markets. Now at Marks Group, we feel it's important to bring our clients closer to their money by removing the middlemen, and we don't own thousands of securities. This creates more transparency, it reduces our clients' investment costs, and it gives us the ability to navigate comfortably through various market cycles. If you have questions about today's video or would like to speak with one of our advisors here at Marks Group, feel free to give us a call. We're here to help.